Hello, this is David Russell, VP of Market Intelligence for TradeStation. And today, we will recap what happened in this past week. The stock market is testing support as blue chips take leadership from big tech. Today is Monday, August 14th, 2023. Stocks are testing support as the venerable Dow Jones Industrial Average takes leadership from newer technology companies. The 138-year-old index rose 0.7% between Friday, August 4th and Friday, August 11th. The Nasdaq 100, on the other hand, fell 1.4%. It was the third time in the last 4 weeks that the Dow outperformed the Nasdaq, which is exactly 100 years younger. The moves represent a shift from the period between March and July, when the Nasdaq surged 31%. Artificial intelligence and cost savings fueled the trend, while more recent buying is focused on healthcare, machinery, and energy. The Consumer Price Index was probably the biggest news event last week. It showed inflationary pressures continuing to ease, as predicted. Producer prices and initial jobless claims rose more than forecast. The headlines did little to impact expectations about Federal Reserve policy. Energy was the top-performing sector again, as crude oil futures hit a 9-month high. Tight inventories reduced production, and growing demand have fueled the move. Healthcare took second place after Eli Lilly jumped to record highs, and its biggest weekly gain ever. The pharma giant announced strong results and guidance. It also noted strong demand for its diabetes treatment and the potential approval of its Alzheimer's drug this year. Axon Enterprise, which provides tasers and police monitoring software, jumped after earnings and revenue beat estimates. Similar news lifted Akamai Technologies. Utilities and real estate investment trusts inched higher last week. Both lagged the market in the first half. Industrial stocks continue to outperform as well. Semiconductors, the top-performing group in the first half, led to the downside last week. Chinese technology stocks and software makers also fell. Now let's chart the market. The S&P 500 slipped 0.3%, its second consecutive negative week. The index tried to rally on Thursday, but hit resistance near the July 27th low of 45.28. It then probed and bounced at 44.50, the high between mid-June and mid-July. If old resistance becomes new support, it could suggest the uptrend remains intact, especially if prices remain above the 50-day moving average. Our SI fell to its lowest reading since early May. Chart watchers may consider that a sign it's no longer overbought. Let's take a look at the week ahead. It brings a mix of economic news and more earnings. Nothing important is scheduled for today. Retail sales and homebuilder sentiment are due tomorrow, along with results from Home Depot. Wednesday brings housing starts, building permits, and crude oil inventories. Attention could also focus on minutes from the last Fed meeting at 2 Eastern Time. Cisco Systems and Target report earnings. Thursday features initial jobless claims. Walmart and Applied Materials issue quarterly numbers. Deere and Estee Lauder report on Friday morning. Thanks for watching. Please visit tradestation.com for more.